Before I get started, I'll just sort of mention we are working to a bit of a timeline here around a market event. We do have a little bit of real room, and we'll talk through that over the night. But first and foremost, I want to thank everyone for coming, and I can just see so many friends and acquaintances around the room. A special thanks, obviously, to the Honourable Andrew Charlton for joining us tonight, and to Cam Blanks from Pacific Equity Partners. But a welcome to our shareholders, our clients, employees, market observers, companies that have already used parts of our infrastructure and actually committed to do that. And a couple of call out here is because Ironbark have recently on the process of using our technology stack. And we've got Simon Shake here from Future Super as well, Simon. And Simon is committed to coming on platform and running an event, which is obviously great news story for us in the coming month or so. But importantly, I also want to mention we welcome here also Ashurst, who've helped us get through the licensing. And for those that haven't seen, I've just sort of put up there is our license. I'm obviously very proud, very proud of. But also regulators. We have some members from ASIC and I think RBA here, but foremost the FCX team. Look, to get here, it's been a huge amount of work over the last 3 years. Hopefully, I can't describe, but we've built a marketplace, a new regulatory regime. We've done everything from scratch, and here we are tonight talking about this event. But what we have built here is market-leading tech, financial market infrastructure. We've delivered a new regulatory environment, and our regulators actually should be commended for taking what I would call a progressive, but also a very proportionate approach to our licensing and getting us to market. Maybe taken a little bit longer, but these things do. And we're very excited to be launching and having transactions very soon. Before we move on, I was reminded just recently, I read an article from an SEC commissioner in the US, very relevant. I've just put some of the quotes up. Public companies listed on exchanges in the US fell. We all know that. I actually think that number's not quite right. There are statistics that say public listings in the last 10 years are down 50%. I think that's bolstered somewhat by the listed ETFs and so forth. But we know public markets have been stagnating. But disclosure requirements can be costly and distracting to management. We all know the costs, both implicit, direct, of going to public markets, but the indirect costs around maintaining a public listing and being in the public eye, so to speak, very taxing on companies. And that's what we're going to talk to a little bit today and our solution. The second quote that sort of I noted there is potential preemptive order that would allow firms to use DLT to issue, trade, and settle securities. Wow, we're here today. We are so far ahead of the US and other markets. We're not working in a sandbox here. The regulators, we've created a new regulatory environment here for private markets and for transacting securities and units in MIS. So we're incredibly proud. A little bit of housekeeping before we get on to the main event. I'm obviously going to hear from our guest speakers, Honourable Andrew Charlton and Cameron Blanks. Cam's at PEP, for those that don't know, probably the preeminent private equity business in Australia today. We'll give an overview of our market and we'll watch a short video demonstration. We'll witness the closing and settlement of the first ever transaction. But importantly, we're here to have a little bit of fun. Why are we doing this today? Well, look, markets are private. We're running a private market. There will be confidentiality and disclosure, notwithstanding Simon has has very generously said, free to welcome that Future Group will be doing a transaction on FCX. But because of that, very difficult for us to run a live event. What tonight is about is running an event, letting everyone to come in, have a look at the event, seeing how the tech operates, and what we're doing here. And at the same time, have a little bit of fun. And what do I mean by that? Well, what we've done is open up a market event. We're calling it the FinClear Continuation Fund, and some wag just sent to me before, if that doesn't go well, does that mean FinClear doesn't continue? No, that's not the meaning of it. But we're running it as a units in an MIS or an unlisted fund. We're setting a NAV at $23. And what we've done is invited all our staff to bid into a book. They all got one unit, $23, $30 odd dollars, to bid into a book. And we're going to set the price through supply. So if you look at the screen here, you'll see a whole row of bids, and that goes down quite some way. You'll see we've got a couple of sell orders in there at the moment. And then graphically, you'll see here the overlap. And so you'll see where we're transacting at the moment. It's saying 30 units will transact. It's saying it'll go off at $24.78. The NAV is $23. And it's showing you the highs and the lows around that. But importantly, from our staff, whoever hits it or gets closest to the price gets a $5,000 prize. So our staff are all incredibly motivated. Don't call it bribery to participate in an event, don't mention the bribery word. But they're all very, very excited. And some of them are here tonight. Some of them will be dialing in. We have a live VC going as well. And they'll all be watching that, and we'll reveal at the end of that the final price and announce a winner. But obviously it's a great opportunity for us to show you the tech. So look, without too much further ado, I'd like to introduce Andrew Charlton. Andrew is the member for Parramatta, for those that don't know. Also recently appointed Cabinet Secretary. But importantly, I think for this group, he's the Assistant Minister for Science, Technology and the Digital Economy, which I think is very relevant to what we're doing here. So Andrew, welcome.
Thanks very much, David. Well, thank you, David. Wonderful to be here amongst so many friends, so many of your partners and clients and supporters. I've followed the progress of FinClear for quite some time now, and it's terrific to be here at this major milestone. And David, you and the whole team should be very proud of what you've achieved and what today represents. And the fact that you've put your license up on the wall, I think demonstrates that pride. I think sticking it up with blue tack is the most Australian way to celebrate an international world first. Maybe next time you could spring for a frame.
I'll take that on.
But what we're here to mark is a truly significant milestone in Australian financial markets. One that is not only an Australian world first, but also a global world first. And this type of innovation doesn't happen easily. It takes a huge amount of vision from you, David, a huge amount of expertise from the team, and the perseverance to keep going when there were so many roadblocks, some of them regulatory roadblocks, in the way that you needed to break through. But I've watched you over the last few years making the case, many trips down to Canberra with Damien, consistently arguing about why this was a positive thing for our country and a positive development for Australian financial markets. I'm so proud that you successfully made that case by getting this license and today launching that product. One of the things I love most about your product is it's not just an innovation, it's an innovation that enables other innovators. By making it easier for companies to raise capital, you are doing a service to the entire Australian ecosystem of entrepreneurs and startups. So for me, this is an embodiment of exactly what we hope that Australia continues to achieve. Really strong innovation, world first products coming to market, right here in Sydney, elements that improve and deepen our capital markets and show the world that Australia can do world firsts. World firsts in financial services, world firsts in technology, and world firsts in regulation. I want to acknowledge ASIC and the RBA for creating the opportunity for this to occur. I think it's an example of regulation that has been forward-looking, has recognised the opportunity, albeit after some time, and created something which here in Australia will be truly special. So congratulations, well done to you, your partners, the many customers you'll have in the future, and the contribution that you'll make to Australian financial markets. Congratulations.
Thank you very much. Very kind. Very kind, Andrew. Thank you very much. So now we'll move on. Cameron Blanks, like I said, Cam is Managing Director of our preeminent PE business, private equity business in Australia, and going to talk a little bit about some of the dynamics.
You want me to take control of that?
Well, no, I'll help you out.
All right, okay. Well, I'm standing here. Okay, so, well, thank you very much as well. And, I just want to reiterate how, I've watched your persistence in getting this up. Dave, we've been talking about FCX probably for a couple of years and applying it into our business. And so I know it's been a long path to get here. So really congratulations to the whole FinClear FCX team for delivering what you have done. So just a little bit about our firm just to frame who we are. So we were set up in 1998 effectively by Bain Capital. So our original investors were the university endowment funds out of the US, so Harvard, Yale, Stanford, MIT and the like. And that'll become quite important when I sort of get onto some of the other slides. Just rolling forward to today, we manage about $15 billion across 5 different strategies. If you go back about 5 years ago, that was about $6 billion, and that was all institutional money. Today, we manage $15 billion, and about $2.5 billion of that $15 billion is on behalf of individual investors. So it's by far and away our most important initiative within our firm is to increase the amount of funds under management that we have from individual investors. So it's really important that we're here today. Maybe we just flick to the next slide in the interest of time. So I just wanted to talk about the growth of the private markets. It's very important, the context here. The private markets have gone from being about $2.5 trillion back in 2010 to now $12.5 trillion. That sounds like a lot, growing at over 10% per annum. But if you put that into the context of the public markets, the total global capitalisation is around $125 trillion. So the way that we look at this is we're only 10% penetrated and growing much faster than the public market. So if you roll forward, we can't see any reason why it's not going to be a $30 trillion asset class. Maybe we go to 15% penetration. We're certainly not saying that the public markets disappear, but there's a huge opportunity for the private markets to continue to grow and expand and develop. And why are the private markets growing and expanding as fast as they are? Well, ultimately it's because the returns are better in the private markets than the public markets, and that's been the case for a very long time. We put it down to, for relatively small companies, through to medium-sized companies in the US context, that's probably 10 or $15 billion of market capitalisation. That burden of being a public company and having to disclose your strategy to your competitors, your margins to your customers, it's really distracting, for the management teams to get on. And we think that's actually what ultimately drives the better returns in the private markets versus the public markets. Unfortunately, that chart on the right-hand side there means that it's actually the growth in the private markets has been fueled by the endowment funds that I spoke about and the pension funds, and very much so the individual investor has largely missed out on these better returns. But there's a really important structural reason for that. So if you just move to the next slide, Dave, I'll explain it. So if you look at the chart on the right-hand side, it's in our industry is something called the J-curve. And the way that private equity generally works is a closed-ended 10 or 12-year fund. And the way they work, so for example, our current Fund 7 is a $3 billion fund, but that's $3 billion of commitments. It's not $3 billion sitting in our bank account. And so these are legally, irrevocable legal commitments to fund when we call the money. And they're only 10 days you've got to actually send us money when we call it from you. And generally investors have got no idea when that call is going to come, and they've got to send it straight away. That's the way that the industry was set up by the endowment funds back in the mid-80s in the US, and that's how the whole industry's rolled out. Why were the endowment funds happy to have that money locked up and put on those sort of commitment schedules? Is they have no members, and it's literally endowed money with no need for liquidity. And so that's the way the industry developed, and that's why it's very difficult for individuals to actually invest in the private markets. Because if you think about the experience, you come and sign a form, usually the minimums are about $10 million. Sometimes they can get dropped to $1 million. And then you have to wait until the private equity firm finds the businesses to buy. That's probably a 4 or 5 year period. So that's those dark blue bars where you're investing, but you get no return. So you're sitting there going, well, all you do is keep asking me for money. Where's my money back? You've got to wait for those light bars when we go and sell the companies, and then the money comes back to the investors. So it's the ultimate trust me trade. It's all going to be great. Just wait for 10 years and you'll be happy. So it's never really, and really you need to be in a lot of different funds to get diversity. You need to be, in probably, a few funds here in Australia, lots of funds in the US, some funds in Europe, and then you should be in different strategies, and you need to be across vintages, and your minimums are $10 million. So you can imagine to run a proper private equity program, you've probably got to have $10 billion to actually run it properly. It just does not work for private individuals. So this is where a lot of these solutions are coming out, and one of those solutions, to this problem, I honestly believe is the solutions like FCX, where individual investors can come to marketplaces like this and start to trade amongst themselves to get liquidity, out of their private equity programs or out of their private investments. So that's why I'm so excited to be here tonight, Dave, to support you and support what you're trying to do, because I think it's critical. Really to get, more individuals exposed to what is ultimately a better asset class than public markets. So with that, I'll let you trade away.
Thank you, mate. Thank you. Thank you very much. Wow, I learned a few things there. I think it's made me even more optimistic and bullish on what we're doing here. So thank you very much, Cam. Look, before we move on to the video demo, I just want to make a few key points around what FCX is. Obviously, it's a private market solution, but it's not just a market as you would understand it. It's a consolidation of many functions, and that's what lets us make it so efficient. It's a registry, it's a custodian, it's a marketplace, it's a clearing and settlement facility, it's a digital wallet for investors. It's secure, it's regulated, end-to-end technology, and we think that that's very important, the regulation in particular, to give investors that confidence to transact. What it's not is continuous trading. Continuous trading means continuous disclosure. It's intermittent, or what we call liquidity on demand. Takes away those continuous disclosure obligations, lets a corporate or a fund schedule when they want to have an event, and that could be, say, in 2 weeks' time, hey, we think there's going to be liquidity, we want to schedule an event. They disclose to the market, make disclosures around financials and other relevant matters, make sure that there's symmetry of information, and goes to a market transaction. They then come off market. You don't sit on the market. It's an event-driven marketplace rather than continuous trading, continuous disclosure. And so it's what we believe will allow companies to stay private longer. It's underpinned, of course, by FinClear. FinClear, if you look down here, and I've shown a few people around, is a very extensive business. We clear and settle transactions for a very large range of counterparts. Our technology facilitates up to $400 billion worth of transactions. We sit on $170 million of direct equities. Clearing and settlement, managing infrastructure is our core capability, and managing client money as well. We hold large amounts of money in client trust accounts. They trust us to manage transactions for them. Very important. The capabilities not only for companies, extends to units in managed investment schemes. Why do we think that's important? Well, obviously, Cam's just spoken to us about the fund opportunity, but actually it lets you put almost any real world asset or a potentially illiquid asset into what we would call a wrapper and allow liquidity events. And so we're excited by that. The funds, interestingly, we don't need to be the registry to manage a transaction. We can bring the registry across for a specific transaction, do the trading and then hand it back to a registry. Think about it as a sub-register, much like chess in that regard, albeit I would say a much more efficient version of chess. So look, we'll now move on to a little bit of a video. It's not long, 4.5 minutes.
Liquidity events in private markets can be complex, slow, and burdensome. Private companies seeking liquidity can easily lose control of the process, while investors want access to quality private market opportunities in a trusted environment. FCX is a regulated, structured platform that provides companies and investors with a simple, secure experience. FCX is built for private and public unlisted companies. Within the FCX platform, companies are able to manage their cap table, liquidity, and governance all in one place. FCX provides companies with the option of an investor portal, allowing users the ability to track holdings and move into private market transactions without friction. Everything is purpose-built to ensure data is accurate, processes are automated, and transactions are completed efficiently. Our cap table service ensures records are right from the start, providing every onboarded company with a full data cleansing. Investors can view their full transaction history within the portal for each holding. FCX supports all securities, including ordinary shares, preference shares, convertible notes, and employee equity. The FCX platform provides an array of tools to manage shareholder data and documentation. Employees and shareholders can execute agreements securely with DocuSign integration to keep things moving. Fully executed versions are saved in a secure document library, providing a single source of truth for all stakeholders. Within our ESOP solution, FCX simplifies employee equity management. An intuitive employee equity tool moves investors through each ESOP milestone seamlessly, from issuance, where the platform can manage offerings for one or many employees, through the ESOP lifecycle to automate key events, including vesting, exercises, and expiry of options. FCX is uniquely positioned to work with companies to move ESOP equity into liquidity events, allowing company employees the opportunity to realise value from their equity holdings. Our tender solution provides private companies with the ability to provide liquidity to their shareholders. Companies have complete control over the process, with guidance from a dedicated FCX support team, increasing efficiency for bespoke offerings. The platform provides full tracking capabilities from expression of interest to execution and settlement. FCX tender offerings can be completed in line with company constitutions and shareholder agreements. The FCX market offering provides shareholder liquidity through auction-style events. Market events can be scheduled by the company at their discretion. During the offer window, investors benefit from full order transparency within the market. Orders are matched at a single price, with settlement occurring immediately upon the auction's close and real-time exchange of cash and shares. FCX operates under regulatory licenses from both ASIC and the RBA, delivering a platform built on transparency, security, and full compliance. FCX strips the friction out of settlement times. Cash is held in a regulated trust account, tokenised, and is available instantly when needed. All cash movements are regulated by the RBA. FCX gives investors a clear, simple view of their private investments. Investor holdings, ESOP, transactions, and documents are all in one place. Investors can set up custom wallets depending on their investment entity structure, with the flexibility to create multiple wallets to reflect multiple account holdings in one place. Individual and joint holdings, company holdings, trusts. The KYC process is part of the FCX workflow, ensuring adherence to the anti-money laundering requirements. Investors can manage their investment in a single portfolio view. FCX is not just another SaaS private market platform. FCX is a technology platform backed by regulatory licensing for trust and transparency. Efficient and intuitive, with real-time access to cash and holdings. Automated and scalable, reducing admin work for both companies and investors. FCX has a highly experienced team across registry, compliance and capital markets. FCX is changing how private markets work. This is modern liquidity, designed for companies and investors. See how FCX works for you. Join FCX today.
Wow. I think that's the bit that I was most nervous about. I think that video demo just got ruled off today in terms of a few tweaks here and there. So fantastic to see. Thank you very much. Now we're moving to the fun part. This is where all the action happens. This is where we find a $5,000 winner very shortly amongst our staff. And so what we're going to do is show some volume. I'm going to invite one of our FCX board members and very long-standing friends of the business, Mr. Paul Macy, to join me. Paul. And what I'm going to show is, and I think I showed this before. You can see volume here. So you can see at the moment the price is matching at $24.78. It's actually $1.78 above NAV. If Cam was still here or anyone in that world, they'd go, wow, that's pretty good. I'd sell as many units as I can above NAV. Where's Cam? Yeah, you'd be pretty happy with that result, right? But look, what we're going to demonstrate here is putting an order in for someone looking for liquidity. Because generally what happens is, as Cam described, sellers, investors will be looking for liquidity. Circumstances might have changed. And they want to find some liquidity. So I set a few parameters before this. One of those was I don't want to sell down any further than 2% below NAV. First parameter. Second parameter, I want to sell a minimum of 150 units and maybe up to 200 units. And so if you look at this, it's probably, if this is live and on your screen, you can actually put a cursor over there and it will actually show you. So I've had the benefit of looking at this before and knowing where it is. But you can see here at around 150 and up to 200 units, probably going to have to sell below NAV and towards $22. That's sort of what it's indicating. So on that basis, 2% discount is $22.54. I want to sell a minimum of 150 units. I'm taking out any sort of favoritism here or any charges of me acting in an improprietary fashion towards our winner, and I'm going to set a range and I'm going to ask Paul to actually determine that price. So Paul, between $22.54, which is my absolute lowest that I would want to sell, and say $22.74, give me a price.
Well, Dave, knowing that it's a margin call and you really need to sell, so let's make it $22.57.
Hey, all right. So we're now going to put an order in to sell up to 200 units at $22.54. Sorry, 57. So number of units there, Ben or whoever's running that, 200 units, please. And we're going to place the order. Okay, so the order's going through now and you can see that move straight away. Indicative price went to $22.57 and then bang, there you go. And so that order, because the market moves per market norms by price and by time. So you get priority on price and then by time. So it's knocked out those two other orders. They were above market. And it's come in, so they're out of market now, and you can see that order has priority. So what's now happening is we're moving to completion of the transaction. And it does take a couple of minutes. And one of the things I want to talk about is, you know, we've talked about instant transactions, atomic settlement, all that sort of thing. And eventually it will get much faster than the couple of minutes that it's going to take today. I think I've got a member of the digital asset team here who is our technology partner. Phil, put your hand up. There's Phil. Phil would say to me, well, David, if you upgraded to a better version of our capability, it would be much faster. It's going to take about a second per transaction, about 2 or 3 minutes. But of course, you know, put that in the context. We've just run a market here. We've put orders in. We've completed a price, and we're about to clear and settle that price in a matter of minutes. Just put that in the context of the ASX T+2 or any other public markets. It's obviously much more efficient. But what's going on? I mean, FCX settlement, it has all the hallmarks of what we would call a traditional asset ownership and transfer of title. Registers are maintained, instrument of transfers are all still completed, albeit electronically. The settlement model is simple, but the beauty of it is in the simplicity of what we're doing here. We don't change the way assets exist. Shares are still shares, cash is still cash. We've simply digitized, tokenized, and put on our ledger. So what's that mean? What we're looking at here is a couple of wallets. On the left-hand side, we've got one buyer wallet. So my CFO, Tony Lynch, don't often see him being called Kieran. Those that don't know, his real name is Kieran Lynch, not Tony Lynch. And he's on the buy side. I'm on the sell side here, and we're going now moving through to settlement. But what's actually happening here? Well, on the buy side, in Tony's wallet, you would see cash. That cash is sitting tokenized on ledger, and it's locked. So that cash is locked, committed to the event. Likewise, on my side, I've put units in to sell. Those units are tokenized, and they're committed, and they're locked. So really what we're seeing, the magic here, or the smarts, and forgive the pun, are the smart contracts that underpin this technology. What you're seeing is a smart contract capability. You know, one of the things I talk to is distributed ledger is great. It lets you put assets on, it lets you lock, but the smarts are the smart contract capability that lets you automate functions. And in this case, many functions that I talked to before. And so what you'll see is, hopefully before too long, and I'll start to sweat soon if it doesn't happen too long. But the ability for us to manage this, to move, use modern technology, remove the need for delayed settlement, that T+2, and even now you've got the US going to T+1. ASX talking about moving to T+1, but after they replace CHESS in 2029. I mean, God help us all. You know, that time frame, the efficiencies that technology can bring to markets. And like I said, you know, it's going to take public markets a long time to get to where we are. Well, why can we do this? Well, look, public markets, as you saw, had lots of stakeholders that sit around them. And I think we've got someone here from the ASX, Clive. I'm somewhat a little bit harsh on the ASX, Clive. Clive, welcome, Clive. I'm at times a little bit harsh and judgmental on the ASX, and particularly around CHESS replacement and what's going on there. But, you know, in this instance, the problem they have is that they have lots of counterparties sitting around markets that they have to be nice to. I spoke to all the counterparts before, the registries, the custodians, the trustees, the list goes on. Very, very difficult to implement new technology, disruptive technology, into an incumbent public market space. We've been able to do it because we have built a capability from the ground up. Welcome to the future of financial markets. And Thank you very much. We now have settlement. That timing was fantastic. Can I get some recognition around that? Oh my God. And so what we've seen here, you can now see all the individuals and the price. The price has gone off at 22.57, and in the wallets, you see the movements of those tokens from cash to securities. So thank you very much. I mean, I'll take questions from here on. I'm just about to fall over with relief that it actually worked. Something. Well, we'll get to that. Not you. You're not an employee. We'll be advised of the winner pretty soon. I think in the background, one of our tech guys. We had some rules around this, just so everyone knows. In a live market, if you're running a market, generally right up until you close the book, you can change the price, manipulate the price. Michael, you would know that best as an ex-hedge fund manager, that you are always holding off until the last minute. What we did was set a few rules, and we said to our staff, you can't change your bid or the price from 4 o'clock onwards, even though the market was going to match now. So I think I've got someone in tech in the background just making sure that whoever our winner is, because there's a digital footprint everywhere, I think everyone knows that, just making sure that no one at the last minute, as soon as Paul Massey said 22, 57, didn't quickly change their order. So we'll find that in a minute. But what we might do is go to some Q&A. We'd like to hear some questions. Love to hear some feedback. So questions, please. I think we might have the odd question. Lukey, yes, always good. Yeah, that's absolutely right. And thanks. That is actually a really good question and really relevant. We started off actually thinking that we needed to be the registry. We wanted to own the registry place in private markets. And then we went, well, actually, it's a really competitive business. There are lots of really good offerings out there if anyone's looked at registry offerings. And we also looked at our experience in public markets as well and a sub-register and what CHESS does. And we went, well, actually, we don't need to be the registry. For companies that want to come on and for us to offer a very efficient registry, yes, we can be. But for funds in particular, so CAM's funds in particular, we're hopeful, obviously, of doing a transaction with CAM. CAM's registry or fund administrator is Apex. And so we've been working with Apex to be able to say, well, we're going to have a transaction. This is the time. We bring across the registry a day or two before. We cleanse all the data. We make sure it's all correct. We run an event, as you've just seen. And then we hand the register back to the registry to do what they do and be a fund administrator. So it's actually not essential, and if you're moving into the fund space, one of the things that we do not want to be is a fund administrator. And so it made a lot of sense for us to adopt this model, and courtesy of Cam and talking to Pep as well. But great question, thanks, Lukey.
What was actually going on in the background when we were all sitting there watching you sort of sweat?
Thanks, Cam. It was working through line by line. So, and it was a limitation of what I spoke to with Phil and Digital Asset. We're using a version of the ledger and capability at the moment. We will be upgrading that over time, but at the moment it's operating on, in tech terms, a single thread. It's working through line by line and matching up and going 1 unit to CAM, 1 unit and 1 unit. And it's taking about a second per transaction. When we upgrade the capability, when we go live, I'm not sure it really matters, if it's 2 seconds, 2 minutes, or 3 minutes. The point being, it's way more efficient than public markets. But we would expect that time frame to come down to seconds rather than minutes. Great question. We have today, and remembering that we don't need to be the registry, but we can be the registry. We've got over 50 companies on platform today, and in terms of value or market cap, well north of couple of $1 billion. So it's building very nicely.
I'll start again. Tony Boyd, Financial Review. In a world where the government wants to punish you for owning illiquid assets above 3 million in your super, because you're going to get taxed on the unrealised gains, and if you look at those charts that Cam put up, it could be quite punishing. If you own Canva at $100 and it's now worth 10 billion,
Yeah.
your tax bill could be quite large.
Yeah.
So I'm just wondering whether you, FCX, would be a beneficiary of what was likely to be a movement towards greater liquidity in the ownership of assets.
Yeah, look, Tony, absolutely, and obviously something we haven't been focusing on, but yes, absolutely. If you're getting a tax from the tax department for an unrealised gain of $1 million, and you've got to come up with that cash and you don't have that cash, but you can go to a marketplace to sell a small proportion of your shares to realise that, absolutely could be a very, very valuable capability. Yeah.
I'll start again. So you can set up parameters like a ceiling and a floor on the unit price, and then other things. What are the other parameters you can set up? So like the trading window, the hours, volume, anything else?
Thank you, Kate. Very good question. And for those that are not aware, Kate's our newest employee, just starting in a week or two into FCX. So very, very happy to welcome Kate shortly. Yes, look, timing is the main one. So you set the parameter as a corporate. This marketplace is controlled by the corporate, and that's the first thing to understand here. It's not a grey marketplace, what we would call a dating service, where you can go in and put some shares on a bulletin board, and if someone wants to buy them, completely away from the actual company. This is determined by the company. So the company gets to determine when they want to have a liquidity event and how they want to have it, whether it might be a marketplace event. So a market is where the price is determined by supply and demand. That's what you just saw there. But the other way that we can run a transaction is through a fixed price tender as well. So where the company might say $2, we're setting a price here. We've got a foundational buyer and some research that's determined that's a fair price, and open it up to expressions of interest. So interest can come in and build a book. And then it will be run as a transaction, very much like those that have worked in markets, like an ECM book build transaction. But there are a couple of mechanisms around that.
We do have a winner.
Yep.
The winner of the event, who had the best bid on the price, was Cable Monk from Perth.
Cable Monk. Wow. Wow. Okay. Okay, Cable Monk in Perth. Let's just put this in perspective. Cable is one of our very best dev resources over in Perth. Cable's been with us for a long time. I think about 8 years ago we made an acquisition of Dion Technology, which included a business called Livewire over in Perth, and Cable was part of that team. So congratulations, Cable. Fantastic. We've probably got time for more questions. Otherwise, I mean, I'm in need of a drink and a bit of nourishment after all that. Kim Slater, yes, okay. Yeah.
This is the last one, Dave.
Okay, last one. I'd love to say yes, but not today. So a few limitations around what we run, and my friends at Ashurst, and I see Stuart Dullard looking me in the eye here as well, and Johnny Gordon would be around as well. Our licence conditions are private markets. Buyers can be sophisticated high net worth only, so it's a buyer's market of sophisticated buyers. You can have retail sellers. So retail sellers obviously are free to sell their shares, but there are some restrictions around that. Now, yes, of course, I would like to think that over time, if there was appetite and opportunity, we could look at expanding our license capability. And it is just that. It's a license capability. It's not a technology capability. It's a restriction around our current license. But if we were, I think I said earlier that I was very thankful that and Johnny Gordon, if he was here, would be nodding vigorously. We're very thankful around ASIC and RBA taking a proportionate approach to our licensing, and that's because this is a sophisticated high net worth on the buy side market. If you want to move into retail markets, the benchmark around financial stability standards lifts quite significantly, and we would obviously need to be pretty convinced of that opportunity. It's not a technology deficiency, it's a licensing piece. Johnny, would you be correct in saying that? Yeah. Thank you very much. Well, look, I think we're done. Again, thank you very much for your time. Thank you all for coming in. You know, great to see such a cross section. I'd be remiss not to say, you know, support from my board here as well. My chairman, David Hancock, is there. I think probably the only one with a tie on tonight, which is great to see. Very proper for our chairman to come with a. Oh, Cam's got a tie on as showing respect. Thank you, Cam. But thank you everyone for coming. This is the future of financial markets. Thank you very much.